Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're going to carefully break down a circulating narrative involving US financial involvement in Iraq, claims about halted funds, and what this could realistically mean for Iraq's economy and the Iraqi dinar moving forward. As always, the goal here is to separate verifiable economic signals from speculation and to give you a grounded, professional perspective on developments that matter to anyone following Iraq's financial future. Let's start with the core claim that the United States has halted approximately $500 million in funds directed toward Iraq, and that this action is somehow directly tied to broader geopolitical strategy, particularly involving Iran, and ultimately linked to the potential revaluation or reinstatement of the Iraqi dinar. At first glance, this kind of headline can sound dramatic. However, in order to understand what's actually happening, or what could be happening, we need to place this in the proper economic and institutional context. Iraq's financial system has, for decades, been closely tied to the US dollar. This is not unusual for developing or oil-dependent economies. Iraq operates a managed exchange rate system, and a significant portion of its international trade, especially oil exports, is conducted in US dollars. These dollar inflows are then funneled through the Central Bank of Iraq, which manages liquidity, currency auctions, and domestic financial stability. Since 2003, Iraq has received substantial international financial support, including direct funding, reconstruction aid, and access to global financial systems largely facilitated by the United States. This relationship has created both opportunity and dependency. On one hand, it has helped stabilize Iraq's economy after years of conflict. On the other, it has made Iraq highly sensitive to US financial oversight and policy decisions. Now, regarding the idea that funds are being halted or restricted, it is important to understand that the United States has, at various points, imposed tighter controls on dollar flows into Iraq. These controls are typically implemented through the Federal Reserve System, where Iraq's oil revenues are held and processed. When concerns arise, particularly around money laundering, illicit transfers, or sanctions evasion, access to these funds can be slowed, audited, or restricted. One of the major concerns in recent years has been the leakage of US dollars from Iraq into neighboring countries, particularly Iran, which has been under heavy international sanctions. Reports from multiple financial oversight bodies have indicated that some of Iraq's dollar auction mechanisms were being used in ways that allowed currency to flow out of the country in violation of sanctions frameworks. So when we hear claims that funds are being halted, it is more accurate to interpret this not necessarily as a sudden political move, but as part of a broader pattern of financial compliance enforcement. The United States, through its influence over global dollar systems, has the ability to tighten or loosen access depending on how well financial regulations are being followed. Now let's address the second major part of the narrative. The idea that Iraq is flooded with US dollars and that the Iraqi dinar is essentially without value. This is an oversimplification. While it is true that the Iraqi economy relies heavily on the US dollar, the dinar itself is not worthless. It is a non-convertible or partially managed currency with a fixed or semi-fixed exchange rate. Its value is determined by the Central Bank of Iraq and supported by foreign reserves, primarily from oil revenues. What is true, however, is that dollarization is a significant issue within Iraq. Many transactions, especially large-scale or international ones, are conducted in dollars rather than dinars. This reduces the effectiveness of domestic monetary policy and limits the central bank's ability to fully control liquidity and inflation using its own currency efforts. have been underway for years to strengthen the role of the dinar within the domestic economy. These include reforms to banking systems, anti-corruption measures, and attempts to modernize financial infrastructure. Reducing reliance on the dollar is a long-term objective, but it requires structural changes that cannot happen overnight. Now, turning to the geopolitical angle involving Iran, this is where the narrative becomes more complex and in some cases speculative. There is no doubt that Iran has had significant influence in Iraq, both politically and economically. Cross-border trade, energy dependencies, and political alliances have created a deep level of interconnection. However, the idea that large-scale US dollar flows are systematically being redirected to Iran in a way that directly controls Iraq's currency value is not supported by clear, publicly verified data. What is more accurate is that the US and international regulators are concerned about any pathways that could allow sanctioned entities to access dollars. This is why financial monitoring has increased and why Iraqi banks have faced stricter compliance requirements. When these controls are tightened, there can be short-term economic effects within Iraq. For example, reduced access to dollars can lead to exchange rate volatility in the parallel market, where the dinar may temporarily weaken against the dollar. This can create inflationary pressure and affect consumer prices. However, these are typically stabilization measures, not destabilization efforts. The goal is to ensure that Iraq's financial system becomes more transparent, compliant, and resilient. Now let's address the most important part for many viewers. What does all of this mean for the potential revaluation or reinstatement of the Iraqi dinar? This is where it is critical to remain grounded in economic reality. A currency revaluation is not triggered by a single political decision, nor by a sudden shift in geopolitical dynamics. It is the result of sustained economic strength, including factors such as GDP growth, stable governance, low inflation, strong foreign reserves, diversified revenue streams, and a robust banking system. Iraq does have some positive indicators. It holds significant oil reserves, generates substantial revenue from exports, and has been working on financial reforms. Foreign reserves have improved in recent years, and there have been efforts to modernize payment systems and reduce corruption. However, challenges remain. These include political instability, reliance on oil revenues, limited economic diversification, and structural weaknesses in the banking sector. Additionally, the heavy reliance on the US dollar continues to be a constraint on monetary independence. The idea that a geopolitical event, such as reduced Iranian influence or changes in US funding, could immediately trigger a revaluation is not supported by how currency systems actually function. What is more realistic is that increased financial transparency, reduced illicit dollar flows, and stronger regulatory compliance could contribute to long-term stability. Over time, this stability can support gradual appreciation or adjustments in the currency's value. But this is a slow and measured process, not a sudden overnight event. In the short term, if dollar access is restricted or more tightly controlled, Iraq could experience some currency pressure in the parallel market. This may create temporary volatility, but it also incentivizes reforms and encourages the use of the dinar in domestic transactions. In the long term, if Iraq successfully implements reforms, strengthens its institutions, and reduces external dependencies, the dinar could become more stable and potentially more valuable. But again, this depends on consistent policy execution and economic development, not isolated events. It's also important to address the narrative tone that suggests everything is happening before our eyes in a dramatic or accelerated way. While changes are indeed occurring, they are part of a broader, ongoing process that has been unfolding over many years. Economic transformation, especially in a country like Iraq, is gradual. It involves coordination between government institutions, international partners, and domestic stakeholders. Progress can be uneven and setbacks are not uncommon. For Iraqi Dinar followers, the key takeaway should be to focus on verified economic indicators rather than speculative interpretations. Watch for developments such as banking reforms, changes in monetary policy, improvements in governance, and diversification of the economy. These are the real drivers of currency strength. It's also wise to be cautious of narratives that frame geopolitical events as direct triggers for currency revaluation. While geopolitics certainly plays a role, it is only one piece of a much larger puzzle. In conclusion, the reported halt of funds, if accurate, should be viewed within the context of financial oversight and regulatory enforcement, rather than as a dramatic turning point. It reflects ongoing efforts to ensure that Iraq's financial system operates within international standards. The relationship between Iraq, the United States, and regional actors like Iran is complex and evolving. These dynamics can influence economic conditions, but they do not override the fundamental principles that determine currency value. For those following the Iraqi dinar, staying informed with balanced, factual analysis is essential. Avoid hype, avoid assumptions, and focus on long-term trends rather than short-term speculation. Thank you for watching Iraqi Dinar News, where we prioritize accuracy, responsibility, and clarity in every update. Make sure to subscribe and like the video to stay informed with reliable and professional coverage. And as always, this content is for informational purposes only and should not be considered financial advice.